Mastering business interruption insurance. Our insurance policy may not cover our own fraud, but yours truly might be on the hook. Where, in the fine print of our business interruption insurance policy, are the specific provisions outlined that address its coverage in the event of criminal or fraudulent activities by its employees or management, and what are the exact policy exclusions related to these types of actions that could potentially impact our business operations. In the fine print of our business interruption insurance policy, the specific provisions outlining coverage in the event of criminal or fraudulent activities by employees or management can be found in the following sections. Section 1. Exclusions. Clause 1. 4. Fraudulent acts. This clause explicitly excludes coverage for any loss or damage resulting from fraudulent, dishonest, or criminal acts committed by the insured, its employees, or management. This exclusion applies to any willful or intentional acts, including but not limited to embezzlement, theft, or bribery. Section 2. Conditions. Condition 2. 3. Due diligence. The insured is required to exercise due diligence in the selection, training, and supervision of employees, as well as the implementation of adequate internal controls to prevent and detect fraudulent activities. Section 3. Warranties. Warranty 3. 2. Compliance with laws and regulations. The insured warrants that it will comply with all applicable laws and regulations, including those related to anti-bribery and anti-corruption. Section 4. Extensions. Extension 4. 5. Dishonesty. This extension provides limited coverage for losses resulting from dishonest or fraudulent acts by employees, but only if the insured has taken reasonable care to prevent such acts and has cooperated fully with the insurer's investigation. Section 5. Exclusions applicable to extensions. Exclusion 5. 2. Fraudulent acts by management. This exclusion removes coverage for any loss or damage resulting from fraudulent, dishonest, or criminal acts committed by the insured's management or directors. Section 6. Policy definitions. Definition 6. 1. Fraudulent acts. This definition clarifies that fraudulent acts include, but are not limited to, embezzlement, theft, bribery, or any other intentional tort or crime committed by the insured, its employees, or management. Endorsements. Endorsement 1. Employee dishonesty. This endorsement provides additional coverage for losses resulting from dishonest or fraudulent acts by employees, subject to the terms, conditions, and exclusions outlined in the policy. It is essential to carefully review these provisions to understand the extent of coverage and exclusions related to criminal or fraudulent activities by employees or management. The policy exclusions include, but are not limited to, losses resulting from fraudulent, dishonest, or criminal acts committed by the insured, its employees, or management. Losses resulting from the intentional failure to comply with laws, regulations, or industry standards. Losses resulting from the insured's failure to maintain adequate internal controls or to implement reasonable measures to prevent fraudulent activities. It is crucial for the insured to implement and maintain robust internal controls, including regular audits, employee screening, and training programs, to prevent and detect fraudulent activities. By doing so, the insured can minimize the risk of losses resulting from criminal or fraudulent activities and ensure that any potential claims are not excluded under the policy.